In today's connected world, what big banks do can have a big impact on all our money. Recently, an unexpected move by the Bank of Japan shook up global markets. This shows how central banks are fighting for power over the money system. Understanding this money game is important for everyone because it affects our investments, savings, and the overall economy. Let's dive in and see what's going on and what it means for us. The Bank of Japan surprises everyone. The story starts in Japan, where the central bank, called the Bank of Japan, did something nobody expected. For a long time, Japan had kept interest rates very low, even negative at times. But recently, the Bank of Japan raised interest rates, even though the rest of the world wasn't doing that. This was a big deal because it went against what the most powerful central bank, the U.S. Federal Reserve, was doing. The Federal Reserve had been raising interest rates quickly to try to slow down rising prices in the U.S. By raising rates, the Bank of Japan was challenging the Fed's control over global money. The impact on currency. When the Bank of Japan raised rates, it caused the Japanese yen to suddenly get much stronger compared to the US dollar. This 15% jump in the yen's value was a huge move for a currency. It sent ripples through global markets. To understand why, we need to look at a popular investment strategy called the carry trade. This involves borrowing money in a country with low interest rates, like Japan, and using that cheap money to invest in higher-yielding assets in another country, like the US. As the interest rate gap between Japan and the US grew, the carry trade became more popular. But when Japan raised rates, it disrupted this trade. Investors had to sell their investments to pay back their loans in Japan, causing further turmoil in markets.
Hey everyone, we are sorry to interrupt you, but we need your help. If you like this video so far, may you kindly give this video a like and subscribe to our channel. This will really help us a lot, and we owe it all to you. Thank you.
The global monetary system. The actions of the Bank of Japan and the Federal Reserve are part of a bigger power struggle between the world's major central banks. There are four main central banks that dominate global finance: the US Federal Reserve, the Bank of Japan, the European Central Bank, and the Central Bank of China. These banks all have to deal with what economists call the impossible trilemma. This means a country can only fully achieve two of these three things at the same time: free movement of money in and out of the country, a fixed exchange rate for their currency, independent control over their country's interest rates, and money supply. Japan, like many countries, has been struggling with this trilemma. By raising rates, they're trying to regain control over their money, but this risks destabilizing their currency and capital flows. Debt challenges. Japan's high debt levels make their situation even more precarious. Japan's debt-to-GDP ratio is around 263%, much higher than the US at 120%. If Japan raises rates too much to match the US, the interest payments on their debt could become unsustainable. This puts Japan in a tough spot, like facing a financial Godzilla. They need to find a way to stabilize their economy, but their options are limited by their massive debt burden. Recession fears. Beyond Japan's specific challenges, the broader global economy is showing signs of potential trouble. There are concerns about a looming recession in the US, with slower job growth and rising unemployment. Falling oil prices also suggest weakening demand, which can lead to economic contraction. These recessionary signals, combined with high inflation, have central banks like the Federal Reserve walking a tightrope. They need to raise rates enough to cool inflation, but not so much that they trigger a severe economic downturn. Lessons from 2020. The current situation has some similarities to 2020, when governments around the world responded to the pandemic with massive stimulus measures. This flooding of money into the economy led to sharp increases in stock prices, real estate values, and even cryptocurrencies. Some experts believe central banks may again choose the path of inflation over deflation, even if it means further currency devaluation. This could lead to uneven price increases, with some assets like technology stocks seeing bigger gains than others. What you can do. While the financial world seems complicated, there are some key things young people can do to navigate uncertain times. Number 1. Build an emergency fund with 3 to 6 months' expenses. This can help you avoid selling investments at a loss if your income drops. Number 2. Diversify your investments across different types of assets like stocks, bonds, real estate, and cryptocurrencies. This reduces your risk. Number 3. Keep investing regularly, even when markets are down. History shows that patient, consistent investing pays off in the long run. Number 4. Avoid the temptation to sell everything when prices fall. Missing the market's best days can really hurt your returns. Number 5. Maintain a stable source of income to support your investing and spending. Number 6. Keep some extra cash on hand for potential opportunities or emergencies. Number 7. Remember that the stock market is a long-term game. If you can hold your investments for 10 to 20 years, you're more likely to see gains. The actions of central banks like the Bank of Japan and the Federal Reserve show how interconnected the global financial system is. Their decisions can have far-reaching consequences for all of us. While the current situation is uncertain, history suggests that patient, diversified investing can help weather the storms. By staying informed and making smart financial choices, young people can navigate these complex economic times and potentially benefit from future market gains. Understanding money matters, even at a young age, can make a big difference.
What do you guys think about the Japanese situation right now? Do you think it is just a market overreaction? Or it can be worse than we think? Please leave it in the comment below.
Thank you so much for making it this far. If you like this video, may you kindly give this video a like and subscribe to our channel. This will really help us a lot and we owe it all to you. Thank you. And as always, stay blessed.